Good morning, everybody. This is Pete Renzulli, Class B member, T3 Trading Group, Chief Marketing Officer of T3 Live. It is the morning call of Friday morning, November 9th, and what a week it's been so far. As you can see here, a chart of the spiders, election, excuse me, the election results are spilt over into the stock market, where we got right back into news in Europe and talk about the fiscal cliff again, and you can see that the selling actually accelerated again yesterday. The one interesting thing that I had noticed is that we had decreased on the volume side on the push down yesterday, and we are pulling into the 200 EMA on the daily chart here. So we're roughly about 70-80 cents above that right now pre-market. But I think that's the fact that we're already below yesterday's low and in between there in the 200 EMA. I think there's a pretty good chance that we open lower and make a push at that this morning. Something that I've noticed that Scott Redler has mentioned a couple of times yesterday afternoon and again this morning, which I think is correct. The expectation for follow-through to the downside has diminished now. There's been a pretty good push in quite a few stocks across the board, and that doesn't necessarily mean let's start getting long with reckless abandon, but it does mean that as a trader you have to know when you're setting up your risk-reward where can the stock possibly move to, and what is the expectation for it getting there? And that's really where probabilities come in, and the expectation for follow-through to the downside. Again, I don't like to use the word overbought or oversold, but we're starting to get to the point where we've moved a pretty decent amount in quite a few stocks in a very short period of time. So what I'm going to do this morning is I'm going to go over one sector in general, but then I'm going to cover ETFs just to get an idea of where the support might be, so we could jump in and then look at some individual stocks within those ETFs. I'm going to look at retailers. I'm going to go right to JCPenney, which actually missed this morning. It's trading down close to $2 after already being down. It's actually down in the support area, believe it or not. Let me just get the exact price here. This low down here is $19, and right now it traded as low as $19 this morning. The low is $19.09. This morning it traded down to about $19.02, a little bit higher than that. But the reason I point this out is I'm going to go into it. There's JCPenney, Kohl's gapping down, Macy's broke out, then missed on earnings. Costco's coming down. And that sector is just not in good shape at all right now, and for that to be happening heading into the holiday season, along with obviously our topic of discussion every morning, Apple getting hammered as well. Next level in Apple is 528.66, which you can see here clearly on the weekly chart. At this level over here, heading back to May 14th. You would be thinking that a lot of these stocks would be gaining strength into the last quarter of the year, and right now they're getting clobbered. So again, I want to repeat something that Scott had mentioned yesterday, and I know Mark speaks about it quite a bit as well, and myself being an experienced trader, I feel the same way. You have to approach your trading business knowing that there's going to be a sweet spot, maybe 4 to 5 months a year, where it's opportunities to really size up and get in there, and you'll learn most of your year in those 4 to 5 months. And if you're not in that environment, or if you don't have that opportunity in front of you, as right now, unless you're a short seller, the opportunities to the long side are thin right now. We do have one that's holding up actually pretty good. Yahoo is actually hanging in there. Inside day yesterday. But the point I'm trying to make here is, if you want to be a long-term trader, if you want to have a trading career that lasts a long time, it's imperative that you guard your capital in market environments that dictate, as Scott will call, portfolio approach versus a tactical approach. And right now we're much more in a tactical approach. We're not portfolio, where you're not going to have bigger positions on the long side. Obviously, you can be short selling here if that's part of your arsenal, but make sure that you're guarding your capital. You don't have to be involved all the time. It's exciting to be in the market, watching every day and whatnot. But if the market is not unfolding according to your edge, it's okay to step aside. All right, so what I want to do now is we're going to go through a lot of the ETFs to get a general feel to see if and when anything might be coming into some support. And again, as we said, not only do you want to look at stuff that might be coming into support, but you also want to see if there's anything that might actually be strong. But as we covered yesterday, OIH here, perfect head and shoulders top and broke to the downside, broke the neckline. 35 looks like the next significant support if it can get through 37. RTH, we already just covered a lot of these stocks, the retail sector, they're broken down. And something interesting too here is when you're going over whether a stock is a change of trend versus a potential change of trend. I do something as simple as if price crosses over like it did here in October, I would consider that a potential change of trend, but then when the moving average points down, I would consider that an actual change of trend. So you need some sort of criteria for where it's a possible change of trend into a new trend. So you can see RTH broke down here as well. And jump over to the XLE energy sector, and obviously OIH breaking down, this guy breaking down also. Just punched through the 200 yesterday, and again I'm using the EMA, not the SMA. Next support here looks like it's around 66. Cover as many as we can here. XLY discretionary breaking down, and you're starting to see this a lot here, where we topped out in September and lower highs, or what we might call lower pivot highs on the way down. Just the opposite of what you see on the way up. So as long as over a 3 to 5 day window we keep making lower lows, as you see here, and lower highs as you see here, the short side is going to be in control. So we really need to see that change before we change our thought process. Clearly the Qs have been the weakest of the major indices right now, and again looking for stuff that might be coming into support. Only $1 away we have the 62 level here, and again you can see we pushed down yesterday on less volume than the prior day, so keep that in mind. Next we have XLK, also breaking down but also coming into support. So Qs and the XLK both coming into a support level. IWM, the Russell actually broke down a little bit earlier than the rest of the market. You can see in October, the indices actually got up here and pushed to a double top up here. And you can see the Russell was a little bit weaker than that. We actually closed right near the 200 yesterday, which is right near that 79 support as well. So we do have some room to go here to the downside. And the Russell actually has been a little bit weaker, as we said. XHB home builders, we've been touting them as the sector, or one of the sectors or industries to watch, along with Home Depot and Lowe's, and those guys have also started to break down a little bit. Home Depot here and Lowe's. So really, what's interesting right now is if you are looking for stocks to buy, you should be looking for stocks that have remained the leader out for the last month, because it's going to be very difficult to find stuff that was strong the last day or even week. And when I say month, I'm more so talking the last 20 trading days, not necessarily just November so far. So I would still be looking to be buying Lowe's, Home Depot, Pulte Homes, Lennar, those kind of guys. All right, let's jump right over to the spiders, and pretty much everybody is looking at the same level here, this 136.93, the 200 EMA on the daily. It seems like a lower opening will take us right into that level. We're not that far away from it now. We're only about 70 cents away. So that would be the first area. Now, what's very important as a trader is to know what you expect to have happen. So I'm actually expecting a lower opening tomorrow, and this morning. And based on how far the stock has moved and combining the support levels just below here, I am looking for a lower opening to hold support. That's what I'm going to be trading off of the open. We'll go over to the XLF. And you can see the XLF has rolled over, and again, it was one of the stronger ones, but this is interesting because, as I had said before, you want to know a potential change of trend into a trend. This little choppiness here, it wasn't a new trend to the downside yet because the ADMA was still above the 21, but now the last 2 days it's actually rolled over, so this would be the beginnings of a new trend. Okay, new trend to the downside, and you can see very, very clearly around 15.20. 15 is the next significant level down there. So if we jump into Citigroup and then ultimately Goldman Sachs, both of them very, very strong a couple of days ago, have pulled back a decent amount now. So if the market gets some strength, you want to go to the stocks, as we said, the home builders and maybe a couple of these financial type stocks that would be the first that would find some buyers because of how strong they've been. One of the last one I want to end up on is list two, actually. We're going to talk about GLD. Very nice strength the last few days. Obviously, market getting hit, the GLD bouncing. and GDX, same thing. This is not as strong as the bounce percentage-wise that the GLD did, but it is something interesting to note that they have actually been strong the last couple of days. As you know, that old classical flight to quality, that kind of thing. So that's really the story now, guys. I would be very diligent about looking at some stocks that, if you want to short sell, such as Citrix, CTXS, that actually have broken down through support levels. We discussed Halliburton, Schlumberger, and BHI yesterday that broke down through the head and shoulders neck to the downside. So you have some short selling opportunities, and you have 2 or 3 sectors that have shown some strength over the last 20 trading days or so that have pulled back as well. So look to be bidding those stocks if the market does find some intraday support. Apple, as we said, has that support level 528.66, which we're probably going to end up opening up not that far off of that. And if we jump over to Google, again, we said Google's been down, but again, you can see the 640 level is a pretty decent level going back to August, as well as the 200 EMA here at 648. So coming into some supports here. So again, not necessarily a long, still a short in quite a few of these stocks. However, we do have support coming up. Be aware of the support. Even if you're not shorting, you should know where to be booking profits into those levels, or not getting short anymore. So if I was looking to be long today, I'd be looking at the spiders at the 200 EMA if we open up and show some support down on that level. And then home builders, Lowe's as well, Home Depot, and probably venture my way over to Goldman Sachs and Citigroup as well. All right, everybody, trade well today, trade disciplined, and have a great afternoon, a great day.
I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.